I regret, as I looked around the different posters, I regretted very much missing yesterday's discussions. I was in London. It sounded like the discussions were good. From what a few people said, the wine was very good last night. And I'm also going to miss much of today because I need to rush back to the States. But just to be able to spend a little time with you today is very exciting. And I'm also haven't really been interested in how the discussions and references to Grameen were yesterday. But let me just jump right in. Microfinance, as probably many of you know, developed and figured out how to right-size finance for the needs of the poor and developed a whole financial services industry around that. And that is well known. What's less well known, and then I'll talk about a little bit this morning, is that microfinance also created really a prototype for how to diffuse social innovations, generally speaking. And even more important, developed an infrastructure unprecedented in world history for diffusing those innovations. And whether those innovations be in finance, whether they be in business, whether they be in energy, health, this is an incredibly important thing that has been probably advanced most in Bangladesh, but is now the rest of the world is catching up. The last 10 days, I've been in two very different countries looking at microfinance, Haiti and India. Here you have a very large and a very small country, a country where there was a boom that has only slowed to some degree, India, and a country, Haiti, that totally missed the boom years. One with a very large number of people in poverty, the other with a very high percentage in people in poverty. One where the capital markets are quite advanced, the other where they're basically non-functioning. And I will mention in passing that from there and other data coming around, microfinance has emerged relatively unscathed from the global financial crisis, especially not as totally unscathed as it did in Southeast Asia in the late 90s, but it has to a large degree, and with a few exception countries and institutions. Let me just tell you a little bit about my own history. I came into the Grameen scene more than a decade after Grameen Bank was launched. I was sitting in a university classroom in Ithaca, New York, and I got this idea that what was going on with Grameen Bank had a potential global application. And I thought it was the most brilliant idea I'd ever had, maybe anyone had ever had, in the way that you do when you're sitting there in your university years. And I wrote Professor Muhammad Yunus a letter, and I said, Professor Yunus, I think you're onto something really terrific, which undoubtedly he was very eager to hear from a college junior to affirm what he'd been doing for a decade. But then I went on to say, I said, Professor Yunus, I'd like to come to Bangladesh and globalize Grameen and join hands with you to defeat world poverty. How about it, Professor Yunus? And he was very gracious in his response. He said, well, come on, come join me. Let's see what we can do. And that really began a 21-year odyssey from that idea very naively expressed in a letter 22 years ago to take these tremendously important innovations that Grameen and others in Bangladesh were developing around microfinance and try to take them much further and much more broadly. Microfinance, as I would come to see from 6 years of living in Bangladesh, was basically based on the success of it was based on virtually every other institution in Bangladesh, foreign or local, underestimated the capabilities of the poor significantly. And then they were built on those wrong estimations of their capabilities. And the story that captured that for me of all my years there was one where Professor Yunus, as some of you know, that he launched a mobile phone company with a European partner a little more than 10 years ago. And what was supposed to be a small element of it, that became a big part of it, was setting up initially hundreds and later tens and hundreds of thousands of women as basically human payphones. Get a cell phone and become the payphone for the village. And Professor Yunus was told that after he'd had many good ideas in his years, but this one was doomed to fail, because if you're going to give a woman a loan to buy a cell phone to become a payphone for the village, she's going to become very confused by this new technology. Buying goats to raise and sell the milk is one thing, but to have a phone this advanced technology, and it would take months, if not years, for them to become comfortable with this new technology. In the meantime, they'd default on their loans. And Professor Yunus' response was, if that's the case, we'll forgive the loans, but let's try it. So a year later, he went to the first villages where they'd given out the phones, and he asked a woman, came up to a woman and said, seemed eager to talk, said, "Ma'am, I want to ask you, how many months did it take you to become comfortable using the phone, placing and receiving calls for people in your village?" And the woman, he's a national figure in Bangladesh, kind of takes a step back, scratches her head, and said, "Professor Yunus, to ask me that question, I think you must own a very complicated phone." Because you see, Professor Yunus takes out her phone to show him, said, "Professor Yunus, my phone, it only has 10 numbers. See, and so when there was money to be made beyond my traditional businesses, she said, it took me about 1 minute to learn each number. So I was in business in about 10 minutes. And then kind of taking pity on him, said, "Professor Yunus, you should get one of these simple phones. Please take mine." So looking more realistically at the capabilities of people, even illiterate people, especially literate people, Professor Yunus developed many things. He developed a bank, a profitable bank with high loan recoveries, with 7 million clients. Maybe it's up to 8 million now. It's, the documentary evidence for impact on poverty is sustained. It's probably the most studied institution in the world. Dr. Hussain carried out some of the earliest and most influential studies on the impact of Grameen. He also developed a family of organizations, nonprofit and for-profit, small and large, that were taking different aspects and leveraging the Grameen brand and infrastructure for poverty reduction means. And in fact, he developed a new type of organization called a social business, a hybrid of a nonprofit and a business. And also really in Bangladesh developed a thriving financial services industry for the poor, highly competitive. Grameen, by most estimates, has about 40% market share, but they're very, some of the best microfinance organizations in the world operating right alongside, which has helped drive innovation and cost reduction. And lastly, what's happened is that really a global movement was inspired around microfinance. Now, given this, what's next? Is microfinance kind of played itself out? I think hardly, and in fact, I think there are tremendous opportunities at what I'm calling microfinance 2.0 to improve it and also to leverage it. And this is one of the great opportunities for social innovation and addressing some major global problems. So let me address these two things briefly. One, a couple of things, how we need to improve microfinance. So we need to press the envelope more. We need to drive down costs. Now the interest rates being charged to borrowers are coming down about 2.5% per year globally, but we need to accelerate that, reach the levels of efficiency that have been reached in Bangladesh, India, Bolivia. In fact, when I was in India last week, I realized that the poor of India, while interest rates are still charged to the poor, are still controversial, the poor of India who borrow from microfinance are being charged interest half as much as middle-class people are paying on consumer credit cards in India, right? So, and 5 years ago, they were being charged about on par. So, but we need to bring that across the entire industry, where in some cases, countries, interest rates are still very high. Second of all, we need to be more accountable to our social missions in microfinance. And I would say this, you could probably put this in a lot of social innovations. The days of simply saying that we have loan recovery and profitability of this level and tell a few charming stories of women who got out of poverty, that's really not going to cut it anymore. And particularly if we want to have major government regulatory support in terms of taxation benefits and so forth. And there's some tools coming online that allow rapid feedback loops in terms of social impact and social progress, one of which we've developed with the Ford Foundation called the Progress Out of Poverty Index. Third area for microfinance is avoiding the trap of over-indebtedness. There are a few pockets of microfinance where many lending institutions are convening in a certain area to lend to the poor, where and I hope I won't scare you, but I myself am scared, where you hear echoes of the subprime crisis in the United States, where in Karnataka, where I was last week in India, some borrowers are borrowing from 6 or 7 different MFIs. Part of that is the individual MFIs aren't lending them what they can absorb, but part of it is they're borrowing too much. And loans are being made that the lenders in their hearts know will not be paid back except through subsequent borrowing. So we need to avoid that trap, and a credit bureau and consumer protection guidelines, I think, will be at the heart of that. Fourth, we need to get beyond simply financing microfinance through, on the one hand, philanthropy, which was very helpful in the establishment phase, and foreign borrowings, which are very risky because of the fluctuation of international exchange rates, and move microfinance to be primarily deposit-taking and deposit-led, which is very tricky, but the Gates Foundation in particular is placing a big bet on making that happen. And secondly, letting MFIs tap into local capital markets, and that's where in Grameen Foundation, experimentally, we had some of our board members and kind of wealthy friends in the United States commit collectively $30 million to a guarantee pool, their own assets that they would pledge if there was a default. We turned that $30 million into $140 million of local currency denominated loans from banks to microfinance organizations without a single default. So that $30 million that was put up was never touched, but changed the course of the direction of $140 million. We're now taking that facility up to $100 million. Fifth and last, we need to harness technology and this is going to be one of the big drivers of the efficiency gains, but also for transparency and the security. I mean, microfinance, the product of microfinance is money, is cash in unsupervised locations. There's huge risks, both security and fraud, that technology has a tremendous ability to mitigate. But if we want to improve microfinance, the second thing we need to do is really figure out how to leverage what we've built up so far, 150 million family network that's been mobilized. And the analogy that I most think of is, the internet was developed, as many of you know, not for communication, what it's used for today, but as a strategy of the U.S. military to communicate and survive in the case of a nuclear strike. And yet, while not designed for that purpose, it revolutionized how we do business, how we communicate, how we socialize, how we socially interact. I'm sure that the people, when they were developing the internet at the Pentagon, were not thinking of Facebook, and this would give rise to all sorts of strange things that exist today and are only possible because of it. Well, in the same way, microfinance was developed to deliver credit primarily to the poor, but what it created in the meantime was what I would call the most significant intentional mobilization and organization of the world's poor in human history, right? And it became an infrastructure to really do business with the poor that never existed before, in a way that the internet or the interstate highway system in the United States allowed for whole different ways of people to interact. What is it? It's a physical infrastructure of buildings. It's a human infrastructure of people located in communities across the world, some of them very remote. Market knowledge. When you visit a BRAC or a Grameen branch, the local branch manager can reel off families, if he's been there more than a year or two, every local player, every local business, who's up, who's down, which poor families have real capabilities, which don't. This is market knowledge that exists almost nowhere else. But also the high-quality relationships with the poor. Poor families remember who gave them their first loan at a non-usurious rate. They remember that till the day they die. And there's a loyalty that develops. But also there's frequent contact with those relationships, usually on a weekly or bi-weekly basis. So while these interactions go on around finance, credit, savings, insurance, there's tremendous opportunities and also some ethical dilemmas around cross-selling, around bringing tools and information around health, around education, around energy, and micro business opportunities, micro franchise opportunities that put through an independent infrastructure would be much more slow to roll out. And this is why organizations like Grameen and BRAC have done some things more in the social innovation space much more quickly than anyone else has done. And people are kind of scratching their heads as why, because they're going through an infrastructure set up for microfinance. And let me give two basic examples as I close. One is around energy. Many of us are extremely concerned about climate change. In fact, much of Bangladesh may disappear into the Bay of Bengal if the climate change, if the worst projections turn true. And what we're finding is that, and what we know, what the researchers tell us, they've been telling us for a long time, is that many poor families, if they could get finance, if they could be educated about how solar energy works, and they could be financed for 3 or more years, that basically it would be less expensive and less expensive than what they're now using for energy, to speak nothing of the fact more environmentally sustainable and also not promoting indoor air pollution. But theoretically true, but practically not making much of an impact. Well, Grameen created a company called Grameen Shakti about 10 years ago, set it out to basically deliver solar home systems in rural Bangladesh and finance them. And I remember when I was leaving Bangladesh and Professor Yunus said to me, Alex, if we ever get to a point where we're doing 100 solar home system installations in rural Bangladesh in a given month, we're going to have a big celebration. You'll come on back. Because at that point I was moving to set up Grameen Foundation in Washington. So I think he forgot to tell me when they crossed that point, but because it happened so quickly, there was certainly a period of learning by doing. But when he came to our board meeting in 2006, he said, we just had our first month where we did more than 5,000 in a month. And now they're doing about 10,000 a month. And Grameen Shakti has more than doubled the next largest kind of peer providing solar solutions in rural developing countries, which is that peer is in India, and is doing so profitably, and is doing so without any new innovation in terms of solar technology, just using existing technology, but leveraging its relationships and financing muscle in rural Bangladesh to do something that had never happened before on that scale. And in fact, when I was visiting with the second most successful organization doing this kind of solar, called Selco in southern India, they see as a key part of their strategy going forward, partnering with the microfinance sector in India to scale up much more rapidly. They're at about 100,000 installations, Grameen Shakti at around 200,000 at last time I saw the data. But the most interesting for me, and that's very interesting, is around the information revolution and cutting the poor in on that. Village Phone, as I mentioned earlier, ended up being a big success, where 300,000 women became payphone vendors. Now cell phones are so prolific in Bangladesh that there's really no business opportunity there, but there was for quite a number of years. At one point, because there was a commercial cell phone company that was the larger company, the Grameen borrowers had 4% of the phones of the company, but sold 17% of the airtime. Think about that. The other 96% of the phones were in the businessmen, the elites, but actually the real profit center was shared access to these phones where on every call a poor woman was making a cut, was making a fee. Now, Grameen Foundation, we took that model, not to linger on it, but we took it to several countries in Africa, Uganda, Rwanda, Cameroon, and now we've taken it to the Indonesia, Haiti, Philippines, and has had varying levels of success based on the dynamics of this cell phone market, but generally quite successful. And in Uganda, in fact, it was interesting that the telecoms, even though they were, by their license, they had to serve the rural market, weren't. And they said, there's no market there. Who's going to make a call in rural Uganda, except occasionally? So when we set up the village phone operators in Uganda, we had to give them cables, basically antennas, to boost their reception so they could get reception, but a normal phone couldn't. So it was interesting. It was called, I guess, fixed mobile or fixed wireless, because you had to do it from that location. Well, it turned out that once people realized that there were a lot of people willing to make calls, all the telecom operators, seeing what we'd done with a few thousand microfinance loan clients with phones, basically built out a whole infrastructure to serve that area. So you now do not need the antennas anymore. And in some ways worked ourselves out of a business there. But what we did is, in the meantime, we got the poor familiar with technology, and not only using technology, but selling technology. But second of all, we said there's a bigger business opportunity there. The poor is information brokers. And so with support from the Bill and Melinda Gates Foundation, we are now turning those village phone operators using somewhat higher-end devices to be what we're calling community knowledge workers. I think there might be a better term for them. If anyone can think of one, let me know, but that's what we're doing for now. And what they're doing is they're using SMS technology, some internet search capabilities on their phones and these higher-end devices. And they're basically not just allowing people to make phone calls and receive phone calls, but working with different technology partners, one of which I can't name until we have a major announcement in Uganda later this month. The poor are basically going around to farmers and giving them information they need to succeed as farmers. First of all, just weather predictions, which are generally not available, so they can plan their harvest. And also best practices in dealing with pests and dealing with problems that emerge and opportunities that emerge through text messaging and searchable databases that have been put together. And then charging for that. And so it becomes a business for them, but what they're also doing is breaking an information logjam, where best practices keep being evolved, but they're just not reaching in any usable form the people who could use them. Health information, tremendous amount of desire for the poor to have reliable health information from a trusted source. It's not available. And so through using cell phones and higher-end devices, the poor, these community knowledge workers are being able to answer health, which things require people to go to a physician, which things don't. A lot of this information, think of it as kind of WebMD and that kind of thing, but brought to the level of a Ugandan village. And also the marketing of products. Without a lot of effort, we're able to now tell a cultivator when the trucks are coming by to pick up their produce, what they're going to buy them for, which markets are things being sold at the higher price in, and again, finding out that information through a community knowledge worker, and basically everyone in the value chain benefits. So these would be, these innovations and breaking the innovation diffusion cycle from being slow to going much faster. Again, it requires finance, it requires imagination, and it can benefit significantly from leveraging the innovations that came from places like Bangladesh to develop this incredibly robust network of 150 million poor families who are slowly improving their economic situations, but in fact they're probably the best partners and best partner network we've ever had to diffuse many of the innovations, including the ones being discussed here today. So thank you very much.